You just inherited money. The first decision you make could cost you tens of thousands of dollars. Here's exactly what to do. For the first 30 days, do almost nothing. That sounds wrong, but it's where most costly mistakes happen. Not because people are careless, but because they're rushed. There's almost nothing that needs to be done immediately. Just pause, get organized, and don't commit to anything. The only exception is making sure the money is safe. If you received cash, your only priority right now is safety. Use an FDIC-insured account. The FDIC limit is $250,000 per depositor, per bank, per ownership category. If you have more than that, spread it across different banks or ownership structures. A high-yield savings account or money market deposit account is fine. You'll earn some interest and buy yourself time. Don't invest it yet. Don't hand control to anyone. If you inherited investment accounts or retirement accounts, leave them where they are for now. Moving them incorrectly can create tax problems. Before you make decisions, understand what you have. Different assets follow different rules. If it's cash or a brokerage account, you generally don't owe income tax on the inheritance itself. With investments, you usually get a stepped-up cost basis. That means taxes are based only on gains after the date of death, not during the original owner's lifetime. If it's an inherited IRA or 401k, most non-spouse beneficiaries must empty the account within 10 years. In many cases, annual withdrawals are also required during those 10 years, depending on the original owner's status. Withdrawals are taxed as ordinary income. This is an area where mistakes are common, so a CPA is important. If it's real estate, there are ongoing costs, tax considerations, and decisions about selling versus keeping. This is not a quick decision. If it's life insurance, it's generally income tax-free and can be treated like cash for planning purposes. If you're unclear what you have, your first call should be a CPA or estate attorney, not a salesperson. After the first month, you don't need a perfect plan. You need a simple one. Think in 3 buckets. Security. Eliminate anything unstable. High-interest debt is the priority. Paying off credit cards at 18% or higher is effectively a guaranteed return. Foundation. Build or reinforce an emergency fund. 3 to 6 months of expenses in cash gives you stability. Future. Everything else is long-term money. This is what gets invested, gradually, over time, not all at once. Most people get overwhelmed because they try to decide everything immediately. This structure lets you move in stages. Inheritance taxes are usually simpler than people expect. You generally don't pay federal income tax on inherited money. Estate taxes, if they apply, are paid by the estate before you receive anything. Exceptions. Withdrawals from inherited traditional retirement accounts are taxable as income. Selling inherited assets can trigger capital gains tax, but only on gains after the date of death due to the stepped-up basis. A small number of states have inheritance taxes. For specifics, use a CPA. When you're ready, look for fee-only fiduciary advisors. A fiduciary is legally required to act in your best interest. Many advisors are not fiduciaries at all times and only have to recommend suitable products, which is a lower standard. Fee-only means they're paid directly by you, not commissions. Before working with anyone, ask directly, "Are you a fiduciary at all times, and will you put that in writing? How are you compensated? Have you handled inheritance cases before? What does the first year look like?" If the answer is unclear, move on. Also, initial consultations should typically be free. If someone is charging upfront before explaining anything, that's a warning sign. You're not in a hurry. Talk to multiple advisors if you choose to use one. 2 credible directories: National Association of Personal Financial Advisors, Garrett Planning Network. Pause for 30 days. Keep the money safe. Understand what you inherited. Protect yourself from pressure. Build a simple 90-day plan. You didn't ask for this money. You don't need to solve everything today. But you now have a clear way forward. If you want something to print out and work through, the free checklist is linked below.